Welcome to Begin Trade, your go-to channel for trading insights and strategies. Today, we're diving into an important topic: why the market becomes so aggressive on Fridays, and how you, as a trader, can handle it effectively. Listen, we've all seen it. The tape is quiet all week, maybe a little grinding to the upside, then BAM! Out of nowhere, the market goes berserk. Big swings, huge volume, and more than a few broken stocks. It can be exhilarating, terrifying, or both. But fear not, because today we're going to break down the madness of Friday trading, give you the insights you need to navigate the chaos, and hopefully, ring the register along the way. Let's get started. Alright, let's talk about why Fridays are different. Fridays are not just the end of the work week for most people. In the financial world, they mark a critical juncture. The atmosphere on the trading floor is electric, almost palpable, as everyone gears up for the final bell. The stakes are high, and the tension is thick. It's a day when fortunes can be made or lost in the blink of an eye. First and foremost, it's the end of the trading week. This is the moment when all the week's strategies, trades, and decisions come to a head. The closing bell signifies more than just the end of the day. It's the culmination of a week's worth of effort, planning, and execution. Traders and investors alike are keenly aware that the final moments of trading can be the most volatile and unpredictable. This means it's the deadline for a whole lot of players to adjust their portfolios. Throughout the week, positions are taken, strategies are implemented, and by Friday, it's time to either double down or cut losses. Portfolio managers are meticulously reviewing their holdings, making last-minute adjustments to ensure they meet their performance targets. It's a race against the clock, and every second counts. We're talking hedge funds, mutual funds, big institutions, the whales of Wall Street, all scrambling to square up their positions before the week's over. These are the heavy hitters, the ones with the power to move markets. Their actions can create ripples that affect everyone, from the smallest retail investor to the largest institutional player. The sheer volume of trades and the amount of money at stake make Fridays a day of high drama and intense activity. They've got their mandates, their targets, and they need to hit them. Whether it's meeting quarterly performance benchmarks or achieving specific investment goals, the pressure is on. Missing these targets can have significant repercussions, not just for the traders and portfolio managers, but for the institutions they represent. It's a high-stakes game, and everyone is playing to win. And let me tell you, they don't care if you get trampled in the process. The trading floor can be a brutal place, especially on Fridays. It's every trader for themselves, and the competition is fierce. The aggressive nature of the market means that only the strongest and most strategic survive. It's a battlefield, and the casualties can be significant. Now, you throw options expiry into the mix, and things get really wild. Options are financial instruments that give traders the right, but not the obligation, to buy or sell an asset at a predetermined price. The expiry of these options adds another layer of complexity and volatility to the market. Traders are not just dealing with the end of the week, they're also navigating the intricacies of options contracts that are about to expire. Thursday is expiry day for weekly options, and let me tell you, that's a powder keg waiting to blow. The anticipation builds throughout the week, and by Thursday, the tension is at its peak. Traders are on edge, watching every tick of the market, ready to pounce on any opportunity. The expiry of options can lead to significant price movements, and everyone is trying to position themselves to benefit from these swings. We're talking about massive amounts of leverage, bets on the line, and traders making their last-ditch efforts to push the market in their favor. Leverage allows traders to control large positions with relatively small amounts of capital, amplifying both potential gains and losses. As the clock ticks down, the pressure mounts, and traders are willing to take bigger risks to achieve their goals. It's a high-wire act, and the stakes couldn't be higher, and once those options expire, boom, the adjustments begin. And that's when you see these huge swings, especially in something like the Bank Nifty. The expiration of options contracts forces traders to either exercise their options or let them expire worthless. This leads to a flurry of activity as positions are adjusted, and the market reacts to the new reality. The Bank Nifty, with its high volatility and significant impact on the broader market, often sees dramatic movements during this time. It's a wild ride, but if you know what to look for, you can make some serious money. Understanding the dynamics of the market, the impact of options expiry, and the behavior of major players can give you an edge. It's not for the faint of heart, but for those who thrive on excitement and challenge, Fridays offer unparalleled opportunities. So, gear up, stay sharp, and get ready to navigate the Friday frenzy. Now let's talk about the weekend. For most people, the weekend is a time to unwind, to step away from the hustle and bustle of the work week, and to enjoy some well-deserved rest and relaxation. It's a time to recharge, to spend quality moments with family and friends, and to engage in hobbies or activities that bring joy and peace. It's supposed to be a time for relaxation, right? A time to let go of the stress and pressures of the week, to take a deep breath, and to simply enjoy life. For many, it's a time to disconnect from work, to put away the emails and the phone calls, and to focus on what truly matters. Not for traders. See, the weekend is this big, fat question mark hanging over the market. For traders, the weekend can be a source of anxiety and uncertainty. While others are enjoying their time off, traders are often left wondering what might happen next. The market is closed, but the world keeps turning, and anything can happen. You never know what's going to happen. A surprise announcement, a geopolitical event, maybe even a natural disaster. These events can have a significant impact on the markets, and traders have no way to react until the market opens again. The uncertainty can be nerve-wracking, as they have to wait and see how these events will affect their positions. And when the market's closed, there's no way to react. Traders are essentially in the dark, unable to make any moves until the market reopens. This lack of control can be incredibly stressful, as they have to wait and see what Monday will bring. The weekend becomes a time of waiting, of hoping that nothing major happens that could negatively impact their investments. That's why traders get skittish on Fridays. As the weekend approaches, the uncertainty looms larger. They start to worry about what might happen while the market is closed, and this anxiety can lead to a lot of nervous energy. Traders become more cautious, more hesitant to take on new positions, and more focused on protecting what they already have. They don't want to get caught holding the bag over the weekend. The fear of being stuck with a losing position can drive traders to take action. They start to think about how they can minimize their risk, how they can protect themselves from potential losses. This often means making some tough decisions like selling off positions or hedging their bets. So, what do? They hedge their bets, they reduce their risk, and they take steps to protect themselves. This might mean selling off some of their positions, or it might mean buying options or other financial instruments that can help mitigate potential losses. The goal is to be as prepared as possible for whatever might happen over the weekend. And sometimes, they just plain old sell. The fear of the unknown can lead to a lot of selling activity on Fridays as traders look to reduce their exposure. This can create a lot of volatility in the market, as everyone tries to get out of their positions before the weekend. The result is often a flurry of activity, with traders scrambling to make their moves before the closing bell. This creates a rush for the exits on Friday afternoon as everyone tries to get out of their positions before the bell rings. The trading floor becomes a hive of activity, with traders rushing to make their final moves. The pressure is on, and the stakes are high, as everyone tries to position themselves as best they can for the uncertainty of the weekend. It's like a game of musical chairs, and you don't want to be the one left standing when the music stops. The fear of being caught off guard can drive a lot of the decision-making on Fridays, as traders do everything they can to avoid being the one left holding the bag. The weekend uncertainty is a powerful force, shaping the actions and strategies of traders as they navigate the ever-changing landscape of the financial markets. Now let's talk about the real movers and shakers in the market, the institutional investors. These are the big boys, the pension funds, the mutual funds, the sovereign wealth funds. They've got trillions of dollars under management, and they're not afraid to use it. And guess what? They love to make their moves on Fridays. See, these institutions have to rebalance their portfolios, just like everyone else. But when they buy or sell, it's not in small chunks. It's in huge blocks that can move the entire market. We're talking about hundreds of thousands, even millions of shares changing hands in a flash. Now you might think that's a bad thing, but it doesn't have to be. If you can identify the stocks they're buying and selling, you can ride their coattails all the way to the bank. Now let's talk about the most unpredictable factor of all human psychology. In the world of trading, your mindset can be your greatest asset or your biggest liability. It's not just about knowing the markets or having the right tools, it's about managing your emotions and staying level-headed, especially when things get tough. See, trading is an emotional roller coaster, and Fridays are like the final loop-de-loop. The market's volatility can make even the most experienced traders feel like they're on a wild ride. The highs can be exhilarating, but the lows can be devastating. It's during these times that your emotional resilience is truly tested. Everyone's tired from the week, they're ready for the weekend, and they're looking for a win. This fatigue can cloud judgment and lead to impulsive decisions. When you're exhausted, it's easy to overlook important details or to take unnecessary risks just to end the week on a positive note. This can lead to some irrational behavior, to say the least. Some traders get greedy, thinking they can make a quick profit before the weekend. They see the market moving and they want to jump in on the action, even if it's not a smart trade. This greed can blind them to the risks and lead to significant losses. They see the market moving and they want to jump in on the action, even if it's not a smart trade. Others get scared, feeling the pressure of the market's volatility. They see the volatility and they panic sell, even if it means taking a loss. Fear can be just as dangerous as greed, causing traders to make hasty decisions that they later regret. They see the volatility and they panic sell, even if it means taking a loss. Panic selling can turn a temporary dip into a permanent loss, and it's often driven by the fear of losing more. This fear can be paralyzing, making it difficult to think clearly and to make rational decisions. And then there are those who just want to close out the week on a high note, so they chase gains or sell winners too early. They might be driven by the desire to lock in profits, but this can lead to missed opportunities and suboptimal trades. It's important to remember that not every trade needs to be a home run, so they chase gains or sell winners too early. This behavior is often driven by the fear of missing out or the desire to end the week on a positive note. However, it can lead to poor decision-making and missed opportunities. It's crucial to stay disciplined and to stick to your trading plan, even when emotions are running high. Don't let emotions get the best of you. Remember, the market will always be there, and there will always be another opportunity. The key is to stay patient and to wait for the right moment. By keeping your emotions in check, you can make more rational decisions and improve your overall trading performance. Stick to your plan, trade with discipline, and don't let the Friday frenzy cloud your judgment. By maintaining a clear head and a disciplined approach, you can navigate the ups and downs of the market more effectively. Remember, successful trading is not just about making money, it's about managing risk and making smart decisions. Stay focused, stay disciplined, and don't let your emotions dictate your trades. Last but not least, let's talk about the global market. We live in a connected world, and what happens in one market can have a ripple effect across the globe. And guess what? Fridays are no different. See, the Asian markets close right before we open, and the European markets are open for part of our trading day. So if there's a big move overseas, it can definitely impact our market, especially on a Friday when everyone's already on edge. Keep an eye on the global markets, watch for any major news or events, and be prepared to adjust your trading strategy accordingly. Here are my tips for trading on Fridays. 1. Focus on key support and resistance levels. 2. Avoid over-leveraging. Volatility can be brutal. 3. Use stop losses religiously. 4. Trade conservatively. Don't force trades if the market looks unpredictable. Remember, the goal is to protect your capital and trade another day. That's all for today, traders. Now you know why Fridays can be wild and how to handle them smartly. If you found this video helpful, give it a thumbs up, share it with your fellow traders, and don't forget to subscribe to Begin Trade for more trading insights. See you in the next video. Trade smart, trade safe.